What's up, everyone? Eric here again for Redwood North Trading. Today is Monday, the 7th of December, 2020. This is my closing trade alert for Apple. I opened this trade about 12 days ago on November 25th. I sold the 105 put for $1.62 credit. And then this morning I closed the trade by buying it back for 65 cents, which was just short of 60% of my max profit. Let's check out the chart to see how the trade played out. All right, as you can see, I opened the trade here on the 25th of November, 2020. This is the vertical orange line here. Sold the 105 put for $1.62, which is this line here. The trade opened at 116.30, and this trade basically went my way from the get-go. And today I closed when the underlying stock price was at $124. That leaves me with an overall profit per contract of $97. Percent of max return is 59.9%. Return on capital was 8.1%. And the duration of the trade took just short of 12 days. I partly got into this trade because of this long-term channel. It had been going sideways here as a correction wave, basically, kind of a consolidation. And it hit here, and then the next day it bounced up. And so I decided to get into the trade. All the deltas and the option chain made sense, so I went long here with the 105 put. Even though I was in this trade for almost 12 days, that actually includes 2 weekends, so it's only been 7 trading days across here. Today's Monday. I almost closed it out on Friday or even Thursday because I had already gotten to about 50% of my max profit. However, I have several other positions in my overall portfolio that I need the price to go down. So I kind of held on to this one a little bit longer as a hedge towards those other trades that need to go down. This one needed to go up. So that's why I held to basically 60% of the max profit on this trade. Normally I would have probably cashed out last Friday at like 50 or 55%. So in that case, this trade would have only been like 9 or 10 days. I guess that's pretty much it for this trade. There isn't much to learn with these quick and easy winners, really. I basically entered this almost perfectly near the bottom of this slight dip here, and the overall trend went up, which is exactly what I wanted. So it ended up just being a quick and easy winner. Nothing wrong with that. I will definitely take it, especially because, like I just said, I have a few trades that are still hurting from when the vaccine was announced couple weeks ago. I guess it's about a month ago now. The vaccine was announced and there was a huge spike up in the overall market. I have like 4 or 5 positions that are being pushed to the brink of their strikes. And like I said, this is kind of a hedge against those. After I got into this trade, I realized the Elliott wave pattern was lining up nicely for me here. Elliott waves are kind of new for me, but this one worked out perfectly, even though I kind of didn't know it going into it. But it definitely confirmed my position once I got into it, that's for sure. I'll bring that up real quick here. All right, so here's the Elliott waves. The last wave 5 ended up here, and then you had the A, B, C correction here. And then from there, you obviously had 1 up, 2 correction, and then this was the start of the 3rd Elliott wave, which is commonly the longest and biggest profit-making wave. And so once I saw this after the trade was open, I definitely felt a little more comfortable letting this ride, you know, those extra 2 or 3 days or over the weekend to squeeze out a little more profit in this trade than I normally would have. And certainly if I get a little correction down here on this wave up, right, if this kind of comes down in here again and then keeps going up, I'll definitely keep my options open to get back into this trade again. You know, if it drops to here, I could probably get in at the 110 put for nearly the same price. And then I would just ride the Elliott wave up again here into January and take a double dip on the January expiration cycle. So anyways, that was kind of nice to see after I'd opened the trade. It was just a little more confirmation that it was a good position and that the deltas and everything made sense. You know, it never hurts to have corresponding elevating factors, right? I'm definitely still learning about these Elliott wave predictions, but they seem pretty powerful if you can kind of figure them out and realize what's going on. A little debatable out there of how accurate and predictive they are, but in my limited experience, they seem just as good as any other indicator out there, and potentially better. So I'm definitely going to try to learn about them a little bit more and kind of incorporate them into my trading strategy. Like I said, it never hurts to stack up the elevating factors, right? If you have one elevating factor, that's great, but if you can stack up, you know, the Elliott wave, this channel, the MACD's heading up, the RSI's heading up. I mean, those are all great signs to sell a put, because then price goes higher, that put loses value. Me as the seller, I get to keep the value that's sucked out of that put that I sold. I've definitely been doing really well selling puts lately, and I'm probably going to keep doing it. You just kind of have to be a little more picky with your setups, right? Because it's more directional. But again, I could have cashed this out for about 50% of max profit after, 7 days, 6 days, definitely by last Friday, which would have been only 9 days. So I guess it makes sense, right? The more legs of a trade that you have, the slower the trade works. So in a strangle, you'd have the low put and then the high call. So that's 2 legs. So that takes longer to profit off of both of those legs, right? And then an iron condor has 4 legs. You buy and sell a put, and then you buy and sell a call. So then you have 4 legs of the trade. So that takes even longer than the strangle. And then you have a vertical spread where you have the put and then another put as a protection. And then that takes a little bit longer to work. It's kind of like half an iron condor. And then obviously you end up with just a single put or a single call. And then those work the fastest, which is a pro and a con, right? Because if something goes against you, then you lose money faster. But if it goes for you, like this one did, this one just jumped up about $8 in underlying stock price. And I got paid, which I could have cashed out in less than a week, right? But I decided to hold on a little bit longer. Anyways, that's kind of the pros and cons of just selling a single naked put or selling a single naked call. And lately I've been doing really well selling the puts, so I'm definitely going to keep my eyes open for more opportunities. All right, I think that covers everything. I will see you in the next trade.